Hello and welcome to Crypto Weeklies. Today we analyze Bitcoin, conduct machine learning based price forecast, as well as some of the weekly price action based risk levels, accumulation strategies, and also regression analysis. So we'll start with the weekly price action for Bitcoin, especially since 2023. None of the content is financial advice. This is the zoomed in version of the chart. You can see that this is the weekly price action based candlesticks for Bitcoin. Along them are in blue is the 20-week moving average, in yellow is the 100-week, and in red is the 200-week moving average. If we focus on this area, over here is you can see that the last time Bitcoin had a major run was when the three moving average, the 20-week, the 100-week, and the 200-week kind of coincided with each other, and then Bitcoin rallied. Right now, the 100-week and the 200-week are having a convergence, both at 40k and 39.54k respectively. But if you focus your attention on the weekly candles since March 2024, March 11th of 2024, when for that week the high for Bitcoin was at around 73,000 and 73.75 thousand. From that level, the trend has been clear that in terms of the weekly candles over here, there are more red candles than green candles. Bitcoin goes up for a couple of weeks, or if you ignore this flat candle, and then majority of the time is spent going down. So 1 2 3 4 5 candles on its way down, tests some goes below than the prior low, that is forms a structure of lower highs and lower low. If you zoom out, you would notice it more better over here. The structure of high lower highs and lower lows. So from this high to this high, a lower high was again a lower high over here, again potentially a lower high for this week. And again, whenever the lows get at around 55k, then the next low at around 53k, then potentially at 49k. So that's the structure that we are in ever since March. So hopefully this time around, as the price is above the 20-week moving average, if this holds as support, the 20-week is at around coming in at around $62,900. The current price of Bitcoin is at around $63,600, so about $1,000 more than the 20-week moving average. So let's see if price manages to stay above the 20-week. If it does, this is the norm. Now that we have analyzed the candles, so these are the moving average, the 20-week in blue, the 100-week and 100-week in orange, and 200-week in yellow. If we create a normalized risk chart for Bitcoin based on these averages, you would notice that right now, from March, when the risk was at around 0.52, based on these averages, right now we are at around 0.29 risk. The key idea with this analysis is whenever the risk for accumulation is less than 0.2, that's a decent time to get in. So the last time when Bitcoin's price was at around 50k, at that time the risk levels were, per this normalized risk chart, was around 0.21 risk. So over the course of the bear market, though, starting May of 2022 till about October of 2023, that's where Bitcoin was, per this analysis, in an accumulation zone. If you overlay the price on this one, starting May of 2023, where that is again price below 30k, till again October 2023 price above 30k. So that's the story with this analysis. This also helps identify tops for BTC. Again, we are not quite there yet. If and when this analysis flashes a buy signal, we'll definitely make a video on this one. In terms of analyzing what are some of the narratives, again, over the last 7 days, this is the bullish nature of the market is back. Bitcoin is definitely talked the most. These are the discussions on YouTube and X related to crypto over the last 7 days. Again, some of the other altcoins are being talked, but none as much as Bitcoin. That means Bitcoin still holds the market. In terms of the normalized risk for the top 100 cryptos by market cap, the latest zone that we are in is in moderate risk. If you zoom it over here, you would notice that we have left the green zone to this yellow territory, which is moderate risk between 0.2 and 0.4 risk between. And again, the key idea is whenever for the entire market, whenever the risks are either in the green zone or in the blue zone, that's where most of the decent buy opportunities occur. In terms of the news sentiment over the last 24 hours, this is classified using machine learning. Most of the narratives are bullish. Overall sentiment score is at around 55.7, or slightly bullish than bearish. In terms of Bitcoin and its own regression-based price-based regression analysis, this is the weekly price of Bitcoin in white. On top of them are this polynomial regression-based bands. The base case or the fair value for Bitcoin per this polynomial regression function is at around 72,400. If we ignore the 2 standard deviation moves on top and on bottom, right now we are in this range bound market within the 1 standard deviation moves. Even the rally to 73k at a weekly level was not higher than the 1 standard deviation peak. Right now, if we were to have a mean reversion rally back to the fair value, that would correspond to Bitcoin hitting 72,400. Again, that would still not be the all-time high for BTC. If on the other hand there were further pullbacks towards the end of the year, the level to watch is at around 43k. Again, confluent with the 100-week and 200-week. These averages also are dynamic, and they go up in time if the prices stay above 40k for a prolonged period of time. The 1 standard deviation peak for Bitcoin at around 116,000, that would correspond to a similar phase of the market like we witnessed in 2023 March, this year's March, 2024 March. So that is again in the mania phase, Bitcoin does go to its 2 standard deviation peak at least in the last market cycle, and that 2 standard deviation peak is at around 193,000 at this point. So again, not a machine learning based forecast, but regression based analysis. On the other hand, if you were to focus attention on the machine learning model and utilize that training data since 2014 and come up with a base case, bull case and bear case for Bitcoin at again same 70% confidence level. The base case for Bitcoin, now that we are potentially ending September, starting the week, the current week ending in October 6th, between 66k to about 71k. That's the base case. That is if there aren't any major bullish or bearish catalyst. That's the likely price action. If on the other hand we witness a bullish market in quarter 4, the price action could be between 68k all the way to about 98k. On the other hand, if there is a bearish pullback, the price action could go to between 54k and 60k. So this is again the purpose is not to tell what will happen in the market tomorrow, but again to be more towards be ready no matter what happens, and again for positioning in any scenario. And if you are interested in week by week analysis, this is the tabular version of the same forecast. The base case is in the middle. To its left are the 3 standard deviation bear case, to its right are the 3 standard deviation bull case. All of the content available on cryptoweeklies.com. This is the home page of the site, and again for each crypto there is one row dedicated to it, and all of the content is available on this particular tuple. Again, this is the on USD pair, on its ETH and other crypto pairs. They are available on the third table. But most of the content related to USD is available over here. The chart that we started with was the OHLC chart that we just worked on. Now in terms of accumulation for Bitcoin, there are three models: the SMA model, the DCA model, and TWAP model. The SMA model, which is the simple moving average based 20-week simple moving average based price action, color coded and normalized between risk between zero risk and one risk. The key idea is whenever the price goes sufficiently down compared to the 20-week moving average, that's the low risk environment, color coded with this plum level. Again, these would not be the market cycle bottoms, but definitely points from where the mean reversion trade becomes more and more evident. So that means it's a shorter term accumulation model. Again, this did not identify the actual bottom of November December 2022, but again of the July 2022, again fairly close to the actual bottom. So that's the per this risk level. Again, this identified the March top as well. Again, it was not hopefully not the market cycle top, but again an intermediary top based on the movement between the price and the 20-week. Right now, per this model, the risk to accumulate is at around 0.39. Again, risk is one way to look at it, and again, risk, the opposite side of risk is reward. Whenever the risks are low, that means potentially the reward is high. Again, if you look at it from a percentage based approach, then the 40% chance that Bitcoin is close to the bottom in this per this metric. And again, as this score goes high and high, that means very less chance that Bitcoin is close to it's close to a value or value zone. Again, the 61% chance that Bitcoin is in value zone, 39% chance it's not in the value zone. Again, per the analysis, again, this is the fourth best time to dollar cost average at a shorter term level. In terms of the dollar cost average model, this is one market cycle, considers one market cycle based on the relationship between the price and the proportional distance between the price and the regression line. So over here, if we were to focus our attention on what is currently available, for this analysis, the price is close to the regression line. Over here, the regression line gets quite extended, so I'll zoom this chart a little to get the gist. The regression based fair value for BTC per this analysis is at around 54k, and this is again one market cycle at a time. So per this model, the risk level is at 0.52. So that's where Bitcoin is. This is a linear regression based model. For Bitcoin, we have kept this model. For other altcoins, we have instead of the linear regression model, what we have done is, for example, a polynomial regression function where we identify the risk buy zones and sell zones based on the momentum instead of a linear regression based analysis. Again, per this model, for Bitcoin, the risk level is at around 0.52. Again, a 50-50 chance that Bitcoin is close to its eventual peak. At this point, Bitcoin is the equidistance from its eventual peak and its eventual bottom. So in the middle of its rally. So the last but not the least is the time weighted average price based analysis. This provides a perspective that what is the time weighted average price for Bitcoin. This is the blue line. Per this model, the time weighted average price for Bitcoin is 17.97, almost 18k. So Bitcoin does not quite reach the time weighted average price due to its growing adoption. Even in the bear market, you can see that when in January 2023, the time weighted average price was almost at 13k. The eventual bottom was at around 15.5 or 15.8k. So this model analyzes the distance between the price and the time weighted average price, and based on that distance, the risk is calculated. Right now, the risk for accumulation is at around 0.77. That means again, the likelihood that the distance between the price and the time weighted average price to increase further is only 23%. On the other hand, the 77% chance that Bitcoin's risk is at around Bitcoin is doing well compared to its time weighted average price. So that's how we derive these models. Again, they do a fair job of identifying the peak in March of 2020 for the um, risk level identified by this model was around 0.85. So that is again one identification of bottom as well as identification of peaks is possible with these analysis. So hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.